Good morning. Well, I think today is going to be a stabilization day. The markets have fallen a tremendous amount in a short amount of time. And in reality, over the last few days, just looking at the futures here prior to today, that's just starting. What is Dan telling me here? I thought everybody just liked looking at us, Dan, so I just stay on that, but screen's up. All right. So I think today is going to be a stabilization day, which kind of makes sense after these 3 wide range days that really have, other than whipping up and down, have gone nowhere since 4 days ago. So the big move down, and it certainly doesn't seem that way. You haven't gone through the wild gyrations, but just look at where we are here and here. It's down a little bit. These are big range bars, but it was a big up and then back down. And again, we're starting the day today. It would be interesting, I suppose, if this could be a big green bar and kind of what we call a Christmas tree kind of effect of, red, green, red. Well, will it be green? Will it just be a consolidation day of just chopping around here? So, the halt yesterday kind of messed up the charts, and I was just going sideways and then down and just flip-flopped around throughout the trading day. So, it held that prior low area. And so now we'll just have to see, it's holding now. We just have to see how this shapes up here today. We all know it's down around 30% or so. I think the Russell is down about 40%, which is, it's just incredible. Some of those stocks in the Russell, I saw a few over the weekend down 80%, a whole lots for 50, 60%. So a lot of things have been just crushed here. So again, maybe just beginning to build up this base that started last week, and then, the gap down just threw that out the window. So it's kind of just a start over here to see, in the same area, can we begin to hold this area and then possibly start some kind of a counter trend move. Now, larger moves, sustainable larger moves occur after this kind of volatility and range expansion contracts. So, and with a pattern like this, I suspect that would take at least a couple of days. And then we would see, can we get going, getting through these prior highs up here and so on. So let's take a look at the other markets. I don't think we're going to see anything too much different. Yesterday was the giant day. Everybody's quoting the Dow down 3,000 points in a day. A lot of that came on the gap. But, the same pattern, big red bar, green bar, red bar, and essentially a little bit lower, but close to the same place. And, whereas the markets are coming up to right now, they're almost exactly in the same place as they were after all these wild moves. Actually, Dan calls that yes, you're right, a bull sandwich, right? It's how he calls it. He's been talking that particular pattern for probably 15 years, and I still have a rough time getting it right. But, he says the meat's in the middle, right? The bears are eating the bull. Yeah. But so here's a twist to that, in a sense of that. Look, that pattern is suggestive of a continuation, and continuation patterns have lower probability of following through after a large decline. Whereas continuation patterns, however they are, which could be a 1, 2, 3, a 1, 2, 3, 4, a 180 type reversal, any type of continuation pattern has a greater odds of following through at the beginning or what's perceived to be the middle of the trend. Whereas this theoretically is at a short-term end to the trend, right? And where we have a measured move, okay? So you can see the beginning of the move, the stabilization, it broke. Here we have the type of a bull sandwich and then the follow through. So to have any kind of a continuation pattern after a measured move into an area of support, look at the weekly chart, I give that a low probability of any significant follow through, right? Without some at least stabilization. And in addition, where we typically look for a range expansion bar to signal the end of a trend, well, here's your range expansion bar, and then another range expansion bar, and another range expansion bar, but they're all in the same area. So whether this is, just where the beginnings of starting to put in some kind of a short-term low is yet to be seen, but the weekly charts, of course, do support that. Multiple bars down into this last swing low, pivot low, and below that is a void. And that's what happened to the Dow, right? It cleared this and then entered the void and cleared that low. I don't know what I had that. Okay, so that's connected to this other consolidation where there's a cluster of pivot lows over there. Right around, it came down to 20,000, right? Big whole number there. So as always, I'll probably say it, maybe it'll be my last breath, my day on earth here in the next 30 or 40 years. I'll say, look to the left. There's the pot of gold, look to the left. Anyway, so again, maybe a stabilization day on order here. See how far it gets into the range here. 5 minute is just basing along here, kind of quiet, and probably many money managers and advisors are shell shocked at this point, and as a lot of investors too. So historically, just a giant move in a short amount of time, and we'll just see if everybody's ready to catch their breath here a little bit and see what happens. I mean, we've been thrown so much in a short amount of time, with now on St. Patrick's Day, the bars are closed. I mean, this is a historical moment. And with the store shelves empty, I mean, I think who's going to be making the corned beef? I don't know. Anyway, kind of wild and crazy times. Gyms closed, bars closed, schools closed, and it'll be interesting to look back on this, later on, see how everything was talked about. All right. So we looked at the NASDAQ, we looked at the ES, same story. The Russell here, Alex, you asked if it was stop trading, and it certainly looks like that. But why would it stop trading at this point? I don't know. And nothing is limit down. Why is it just sitting here dead in the water, not moving? But I guess we'll see shortly. All right, oil is up here a little bit, no big deal, just kind of hanging there under $30. It's got some support right there down at 25 bucks. So I guess sellers are a little to the point of backing off to see what goes here, whether it's going to test that level or going to hold it here. Bonds are down a couple of points here, but overall just a kind of a wide consolidation forming and some disconnect beginning to happen here between, bonds and equities. Well, they've been moving opposite, but there were buyers on the pullback, and here's your range expansion bar, right after the run, signaling the end of the move. End of a move doesn't mean collapsing, but hey, you can see here how accurate this concept is. As prices are accelerating in a very controlled way where the ranges are relatively equal in size, right? It doesn't have to be exactly, don't get your measuring tool out. But as you can see, as certainty increases as to its trend and more longs jump on board, and ultimately you get this giant expansion bar, well, things slow down. Sometimes it marks the top. We don't know, right? In retrospect, we go back and can see that, but this works on daily charts. It works on 5-minute charts. We've used it here in the green room on 2-minute charts where we've gotten some type of really big trend intraday. And also we see a 2-minute chart with a range expansion bar. And typically it's accompanied by an NYSE tick extreme. And we know that that trend is minutes from stalling. Right? We saw it yesterday, right? We got that tick extreme as the markets moved up yesterday. And I said to everybody, I said, this is not the point in time to go long, initiate new longs or add. And it was the high. The tick extreme range expansion is a very powerful combination to use. Right? Good morning, YouTubers. Right? Gold coming down to support here, beginning to stabilize. And we'll see what happens. Right? There you go. Just look over to the left. Why is it stabilizing here? It's not because of connecting some dots and trend lines or fib lines or Gann lines or, new moon or, Saturn over Pluto. Well, you just have to look to the left. Silver collapsed. And this is pretty significant, meaning that I think this $14 level was, pretty significant support area over a number of years. And just blasting down through that. And that looks like it's going lower. And that's about it for me, Dan. I don't have much more to go on here. Look at the transports, which have just been decimated. They're down here. Maybe they have to hit, they're at this swing low, but I don't know. If we get another plunge here, I guess they might need to go down and poke under $120. Government's going to bail out the airlines now. So I don't know. I guess you're paying for that, Dan. I don't know. You're a frequent flyer. And Russell lasted through that support and, down in the area of that prior low there from 2016. Wow. Just above $100. So I guess that's close enough to at least taking a breath. That's it. All yours, Dan. And YouTube. Marsh would like you to look at Microsoft.
Good morning. My pleasure. Yeah, we can look at all opens here because we really don't have that many. Microsoft, the very bearish gap. It was a bullish turn actually. Today's Tuesday, so on Friday, we actually sold naked puts on this, and bearish gap closing at the low. But we sold the way out of the money 125s for that expire this Friday. So that's an open position. As of now, a new trade. It's getting a little gap up here, but you still got to, it's still in a downtrend on the 5-minute chart. You'd be swimming upstream. I just call that a total stay away right now. There's nothing there, even for a day trade. I don't like that at all. For a day trade, compare that 5-minute chart to what I just said here about Teradyne. This is the recipe of a day trade. I mean, there's different flavors, obviously, but we had a breakdown here. So in essence, this, if you look at this crash into the close and the pre-market action, this is a beautiful 180 reversal with a price void. Look to the left. So it's extended right now. So if you can get a controlled pullback on Teradyne, your targets are this area, and it's showing huge relative strength. So, target they're higher. So I'm just showing you that for two reasons. One, it's on my watch list, and number two, to show you that I have nothing of interest with Microsoft right now. Here's another one on my list, Piton. Beautiful reversal yesterday. Uptrend here on the 5-minute chart, gapping up over yesterday's high, showing relative strength, and there's still a price void, maybe up to 26. So that's a day trade watch for me. Here's another one, AAL, beautiful gap reversal yesterday. That's on volume. Pre-market, look at that. It's holding the end of day rally yesterday, showing relative strength as the markets were selling off, right? This thing decides to rally. And now it's going sideways pre-market in the upper third of this run. This is beautiful. This is textbook. Textbook, beautiful setup right there. So let me put that in a different window. Well, I have it right there. So you all watch that with me. On DPZ. Big old mess. What do you want to do with that, McGraw? I mean, that's almost like Microsoft. It's just a nasty gap. You got overhead resistance. McGraw, just compare that to the ones I just reviewed with you. Piton, Teradyne, AAL, day and night. I'm not in a shorting mood right now if the market's going to stabilize. If you were going to short it, you don't have a price void. I don't know. It's just no interest to me at all. I'm not adverse to shorting something quality. Let's see. Alex had something short I wrote down. And it was in your email last night, McGraw. I'm looking for it over here. Right here, ABBV. Look, yeah, right here. So this is a much superior shorting pattern daily. You know that by now. Topping tail, wide range bar, closing under support with a price void. Superior. So if you want something to short, I would join Alex on ABBV. Yeah, cruise lines. I guess I'm a contrarian, but an intelligent one. The pattern has to support it. But these cruise ships, if they're so extended, if it can get over these 2 bars highs, whatever the higher is yesterday or Friday, then you're still swimming upstream, but it's so extended that you can, take a swim upstream for 1, 2, 3 days. I don't know. The chart will tell you how long. So let me go through opens here real quick since you mentioned the cruise ship, because we do have short puts in that. We shorted away out of the money put on Boeing yesterday, the furthest out of the money. It's the 85s for Friday. Disney, we have short puts, the 65s, $30 away. Microsoft, I mentioned, we have the 125s. And Hilton, we're short the 70s and 75s. And I actually picked up some 65s too myself. So that's it in the swing letter, the weekly letter. So we do have some CCL put spread Friday. We sold the 12s, or short puts rather, the 12s with a stop under 14 bucks. Apple, we have a put spread way out of the money, the 205s. I mean, think about that, folks. 205s on Apple. Can you imagine what the broader market would look like if Apple fell down to here by Friday? I can't even imagine. The spiders are already, I mean, I think the spiders would have to fall another $20 to get Apple to fall to 205. I'm just, eyeballing that. Delta Airlines, we shorted naked puts yesterday. Another example, we sold the $20 puts. They're just crazy premiums. I'm going to do a little video over lunch on trading volatility in these high volatility environments. Zoom, we did a put spread yesterday. I don't like the fact that it had a beautiful gap up and now it gave it all up. So that's relative weakness. But we're short the out of the money 101 90s. So we still have a lot of cushion there. LUV, we're short the way out of the money. It's 27.50s for Friday. And even though the stock went against us, we have an open profit. And spiders, we have a put spread for tomorrow. So that's it. We don't have that much. Oh, another long that I texted to our swing people. Lake, look at this. It's a bottoming pattern, but in an uptrend, deep retracement, but small little reverse heading shoulders. There's buyers down here and you got a big price void. So I've given, a couple quality longs here, and I like Alex's ABBV short market. This, I want it to stabilize too. I don't like the fact that it's breaking down here in the last 15 minutes. Breakout failure. So we're going to chill at the open. Medical products. Hey, Kevin. All right, thanks. But Kevin, see your drop down where you're typing to us? If you can change it to all panelists and attendees. But here's what Kevin just told me. Medical product supplier. All right, we got a few minutes here. Let's look at some gappers. It's gapping up, but into a power down bar. I have no interest. I looked at cake, with these, just another industry getting plummeted. Look at cake. $42 down to 16. So the cruise lines, the airlines, travel industries, restaurants, there's going to be opportunities here if they don't go out of business. Retailers are going to get hit more. A lot. I mean, I'm no economist, but what's a 99% chance we're headed for a recession? This is a worldwide global slowdown. Even my buddy here in Lauderdale, who's a pool contractor, says, nobody wants to spend money now. Who needs a pool refurbishing job or maybe you do need a pool since you can't go out in the public. You should, make some iced tea and go for a swim.
I have a thought on that, Dan. I'm thinking about that too, and looking at some of the charts and how things turned lower in the past where there were recessions. And they all started out quite slow. As they rolled over, markets went up, markets started going down. And not until the end of the move did they accelerate lower from the acceleration point where they dropped about 30%. Whereas, those drops in total were about 50% the last two times, going back like 2000, 2008. So you could perceive that the market could go down 50%, right? Theoretically. However, this move started with a 30% drop, whereas the other ones ended with a 30% drop. And the yield curves now have moved up significantly from, well, the longer ones from where they were not even inverted, where those moves down started with an inverted yield curve. And then eventually near the bottom, things improved. So is it different this time? Yes, absolutely. Can this avoid recession? I'm not sure, but I think because of the speed at which things happened and things are being done drastically, we could say, gyms closed, bars closed, so on and so forth, schools. I think it's possible that the turn could happen rather abruptly. It doesn't mean it's going back up to the highs, but possibly I'm just looking at, that information and saying, could a recession be avoided? Maybe. Whereas in the past, the probability of recession was probably close to 90 to 100%. So, people hear, oh, there's a vaccine now. Oh, you can go back to the local bar or your gym or whatever, and people's attitudes change on a dime. So just a thought. We'll see what happens.
Yeah, but I hear you, but this is a big moving ship. And just because I go back to restaurants, the damage is, already in the pipeline, and the definition of recession is just two contracting, GDPs. So
I guess we're going to see, but the bars will open, people will just run there and drink 3 times as much. They'll make so much money on opening day.
Here in Lauderdale, and I'm sure around the country, I mean, they're fighting politically, I'm sure, because the restaurants, they haven't closed them yet. They're still open until 10 p.m. But what I heard they're doing today, and I guess for the foreseeable future, is they're opening up at 8 a.m. and see if they'll get people to come out and drink earlier, particularly today is St. Patty's Day, right? Happy St.
They can't go to, right? The kids are in school. They can't go to work. I guess they just drag the kid over to the bar and have a few.
Yeah, I mean, the one bar down the street is open up at 6 a.m. And I think that's where Gustavo is. That's why he's not in here now. He's down at the bar.
Wow.
All right, so let's, McGraw, remind me later, around 10:30, whatever. Let's scan the whole restaurant sector. Yum here, another one, obviously. Wow, remember I pointed this 1, 2, 3 out? Look at that. It was, wow. But that's a nice gap up here, 72.50. So I'm going to say this with so many charts, the dailies are destroyed. So it's going to be hard to find swing patterns, even though I gave you 3 of them. These are the best 3 I have found so far. AAL, Piton. This AAL looks fantastic, Greg. I think it's a directional and a put spread. If the market holds here, that looks great for a swing. Lake looks good. Alex, I have your NTAP still on my list. That looks great. Let me put that here. That looks great. All right, let's continue here. Apron, look. I wish we saw this reversal yesterday. This is a big old W bottom retest. Look at this. Went up. You got time symmetry. It's a wide retest, and then you got wide range igniting on volume. That is a beautiful bottoming pattern right there. In a downtrend, these are Greg's favorites. But this is your something bar. Yes. Yesterday was your something bar. Look at this thing, was $160. Did they have a reverse split? I don't remember Apron. To my knowledge, Apron never got over 10 bucks. That's that little delivery company, food delivery. Yeah, I don't remember it over 10 bucks. All right, so that was a good turn. Let me just go through a few more gappers here. Dow is in a nasty downtrend. MGM, nasty downtrend. Yeah, let's also check casino stocks for put spread candidates. That's another sector getting plummeted. Look at AAL here, upper right. I think 5-minute high. The Qs are holding, market's holding. I think 5-minute high. $12. Wow, if these $12 puts, 11. Let's sell the $10. Let's sell the $10 puts right now. Naked 37 cents. That looks fantastic. Filled. 5-minute high. Let's buy the stock also.